Hello and welcome to another video of Personal Finance New Zealand with your host, Liam Labuschagne. Today we're talking about one of the best investments you will ever make, and specifically for New Zealanders, and that's the KiwiSaver scheme, which is set up by the government. It's done through independent scheme providers, but essentially it's a retirement savings account that is automatically contributed to by deductions through your normal pay. So you choose your 3 to 10% contribution rate, and that automatically gets withdrawn and paid into your KiwiSaver account before the money even hits your bank account. So already there's a benefit there. But the main benefits for me would be the government contribution. So every 50 cents or every dollar you put in, the government adds 50 cents up to a maximum of $521.43. So basically, if you contribute $1,042.86, then you get 50 cents for every dollar that you put in. And there's also an employer contribution match. So if you contribute to KiwiSaver at the minimum rate of 3%, then for every dollar you put in, your employer will also add an extra dollar. So regardless of what contribution rate you do end up selecting, basically you get a 3% bump on your salary for free. So already that's an incredible opportunity there. You also get $1,000 a year, up to $5,000 to go towards your first home for the deposit. And if it's a new build, then it goes up to $2,000 a year, up to $10,000. So that could be very significant. And basically, if you're on a roughly $35,000 salary, if you contribute 3%, you're going to hit that government contribution threshold of $1,042, and that means you're going to get the full contribution, and you're going to get the employer match, which means you're essentially getting a 150% guaranteed rate of return on all the money you're putting into KiwiSaver before any of the actual investment gains in the funds that you're invested into. So that's just a little bit about KiwiSaver very quickly. So let's get into which funds should you choose. So in my opinion, because it's KiwiSaver, it's locked up until retirement essentially, except for the first home withdrawal and a couple of exceptions. You should basically be going for the most aggressive portfolio you can, which essentially means as many stocks or the highest percentage of stocks that you can possibly afford. And some of the options that I'll show you are actually 100% stocks, and that's my personal opinion. Obviously you can do your own research and do what you want, but in my opinion, if you look at the statistics of stock market returns, basically over any 20-year period you won't lose money. So if you're looking at 20, 30, 40 years out, especially for me, being very young, I've got at least several decades before I get to retirement, which means essentially statistically I shouldn't lose money in the stock market, and therefore I don't really care about the fluctuations in between those times. I just want the maximum returns, and the fixed income part of your portfolio is such as bonds and that sort of thing is going to weigh down your returns. It may make it smoother, but it's locked up anyway. So in my opinion, that doesn't really matter. So essentially what I did is I went out and looked at literally every single KiwiSaver there is, KiwiSaver scheme provider, and unfortunately a lot of the options are all actively managed, which essentially means the fund manager is going out there picking stocks, which you can look at the research again on this, but essentially over the long term, about over a 30-year period, only about 1% of actively managed funds actually outperform market indices. So in my opinion, I'd rather just follow the market through a passively managed index fund. But anyway, with all of that said, let's get to a couple of the options that we have. I do want to mention one KiwiSaver that's been talked about a lot, and that's the Jojo KiwiSaver. Now this one is very popular because it's had fantastic returns over the last year or a year or two since its inception. But fundamentally, this is an actively managed fund, and mostly they invest into high-flying stocks, and that goes against my preference of a passively managed fund, as I've mentioned earlier. And people also say that it's the cheapest KiwiSaver, but it's not, as you'll see. Even according to their own PDS, the average percentage-based fee would be about 0.56%. So, yeah, in my opinion, not really a good option. Moving on to Superlife KiwiSaver, they charge a $30 year annual fee, as well as whatever fund you choose, the management fee for that. So, for example, a good one, if I had to go with Superlife, would be the Total World Fund, which is just internationally diversified index fund, and that has a management fee of 0.58% on top of the $30 per year, which works out to be about 0.88% on a $10,000 balance, and even on a $30,000 balance, it's 0.68%. So that $30 membership fee on smaller balances really will add up, and overall it's not very cheap. So I wouldn't go for Superlife personally. The other one, and this is one I've actually been in previously, and that's Simplicity. I've switched away from them a little while ago, and the reason for this is because firstly, the $20 membership fee per year, especially on a small balance like mine, essentially causes the effective fee to be quite a bit higher. So for example, on a $10,000 balance, $20 plus the 0.31% management fee works out to be about 51 basis points. And even on a $30,000 balance, it is still at about 0.38%. But that doesn't take into account the problem, which is tax slippage. So Simplicity invests into the Vanguard funds over in Australia, and because of this they lose out on some tax efficiency. There's lots of write-ups and information about that, and I talked about it in my previous video about index funds. But essentially that adds about a 20 basis point fee on top of your management fee. So essentially you're paying about 0.5% plus the $20 a year management fee. So already that makes Simplicity more expensive than the options that I would recommend, as well as the fact that it's a growth fund, so it's only 80% shares, and even then for the fixed income part, they are doing mortgage lending, they are doing private equity investments, and they're also doing build to rent funding. So in my opinion, that's a little bit too active for my KiwiSaver personally, and I'd rather just have that all in a passively managed index where they can't basically tamper with that. That's just statistically the returns I'll get, and it's a lot more transparent. So the two sort of KiwiSaver providers that I would recommend is the BNZ Growth. So this is mainly just because they have a no membership fee, so it's only a 0.45% management fee, and they have a buy-sell spread of 0.1%, which is good. And that's essentially 53% international shares, 27% Australasian shares, so Australia and New Zealand, and then 20% bonds and that sort of stuff, fixed income, so 80-20, which is fine if you really have to go with a growth fund, a diversified fund. But in my opinion, like I said, I would prefer a fully shares, fully stocks portfolio. In the long run, that'll perform better. So my personal KiwiSaver at the moment, and my recommendation as the best KiwiSaver out there, is actually the Invest Now KiwiSaver scheme. So they're a little bit different in that they actually let you choose which funds you want, and you can even have multiple funds. So you basically can choose your own asset allocation. For me, I'm just using the AMP All Country World Index Fund. So that's an internationally diversified 100% stocks fund, and it just tracks the world stock market, and it has a fee of 0.45%. So the same as the BNZ Growth Fund, but you just have more growth assets or stocks, essentially 100% versus 80%. So in my opinion, that extra 20% will cause it to outperform compared to the BNZ one. There is also a growth fund within the Invest Now KiwiSaver scheme if you still want a growth fund. And that's the Foundation Series Growth Fund that's put out by Invest Now themselves. And that has a management fee of 0.37%. So that works out quite a bit cheaper than Simplicity. And that's a 20/80 split as well to shares and fixed income. And it doesn't have any of that extra stuff that Simplicity does on the side. It's just fully passive. So that's, in my opinion, if you have to choose a growth fund, I would choose that. But otherwise, the AMP All Country International Shares Index Fund, and then you can over time change your portfolio however you want. And in my opinion, that's just a way better KiwiSaver. And of course, with the Invest Now KiwiSaver scheme, there are no membership fees, and Invest Now doesn't charge their own management fee on top of any of the funds that you invest in. So all around, it's really an amazing KiwiSaver scheme. So yeah, those are some of my thoughts. If you have any questions, of course, comment down below, and hope that really helped you out in choosing a KiwiSaver, or at least give you some ideas, or get you to start thinking about maybe more closely looking at what KiwiSaver scheme you're in at the moment. So yeah, thanks for watching.